Yeah, I mean, I would give them credit. I think DAU is the right metric to track for Twitter, even though I think if you look at the DAU to MAU ratio, it wasn't that great as we saw last quarter. But to your point, the growth, I would say, was strong, especially internationally. That was about 12% year over year for DAUs. U.S. was a little bit softer, around 8%. They only added about 1 million sequentially. But expectations were fairly low for Twitter going into the quarter, decent revenue upside, and even stronger operating income upside on the quarter here.
Operating expenses also going to grow double-digit %. Aaron, at what point do investors get worried that they're spending a lot of money here on policing the platform? It seems to be paying off now, but usually spending is a concern for a lot of these names.
Correct. I think that was a big concern last quarter when expense guidance was above analyst expectations. I think that's one of the things that hurt them last quarter. Going forward, but yeah, clearly they need to catch up. Facebook's been spending a lot more aggressively on privacy and safety issues for the last couple of years now. Twitter's starting to catch up, and kind of why they're going to be spending a little faster growth this year. But I still think health is a concern for the platform a little, and that continues to be their top priority. So I think we're going to watch that closely. Overall, though, we're kind of neutral on the stock here. You're trading around 50 times earnings, growing about 18% this year. So we would like a better entry point, even though it's up today.
Julia, I think that's a good question, which is, as Twitter will continue to fight these issues about policing content and continue to hire more and more people, at what point do the economics of the platform just not look as good as they might have 5 years ago?
Well, look, Kelly, I think that both Twitter and Facebook are relying on a combination of artificial intelligence and people and humans to catch this offensive content or trolling or whatever way we want to characterize the mess that has been on Twitter. And I think that this is not something that Twitter can just skip over. They can't afford to skip that kind of investment. They really need to improve the platform, because that's going to be how they make it more accessible and the kind of service that people want to return to day after day. So they say that their operating expenses are going to increase 20% this year. They didn't change that from last quarter, so this quarter's outlook is consistent with last quarter. And I think that that's one reason why we see the stock up so much, is that analysts have sort of incorporated that into their estimates, and it seems reasonable if they're going to be able to actually scale the platform and reach more consumers. And also, Kelly, reassure advertisers that this is a safe place for them to be.